Guys, I wanted to make a quick video here today. It's about 10:29 a.m., so the charts are live right now. And I wanted to just go over this our community's new strategy that we have been teaching using our community indicator. So again, I just want to say I'm not an investment advisor. I'm not, everything that I share with you today is for educational purposes only, right? Forex trading is risky. You could lose all part of your capital, which is why we always stress that you need to take at least 100 trades on demo with any strategy before you try it with real money. Um, so because even with the best setups, the truth of the matter is that trading is still like a flip of a coin. You're still basically flipping a coin, right? And so that's why it's important to trade on demo, to test the strategy out, to make sure it's going to work for you and that you're going to be able to do it correctly with the right mindset. So our new strategy, we basically use, see if I can find my it's our ATTH Flow with the Trendline indicator added on. This is in the indicator Michael just found. It's a LuxAlgo indicator. I've used a lot of LuxAlgo indicators over the years, and this one works very good. Now I'm trading on the 1 minute time frame. You can do the 5 minute if you want to. Our indicators are the ATTH Flow, which is our community indicator, right? And the settings are multi-time frame, 5 minute, 15 minute, 55 filter. I'll show you that in a minute. The other indicator is now that ATTH Flow, you do have to be a customer of our community to get access to this indicator. The other indicators here obviously are free on trading. Trendline with breaks, LuxAlgo, and the 3 EMA and 1 indicator with the settings 55, 233, and 987. I use this 3 EMA and 1 because a lot of you don't, you may have free accounts and will not, I think it's the free account. I think you get 5 indicators, up to 5 indicators. So if you have to add the EMA indicator 3 separate times to get those 3 moving averages, that kind of is using up all your indicators that you're allowed. So that's why I found this 3 in 1 indicator where you can just with 1 indicator, you get all 3 EMAs. And then I use a higher time frame alignment. Not the guys in the community are not using this right now, so keep that in mind. But there's a reason why I use it, and there's a reason why they don't have to. The reason is that this higher time frame alignment, using the 3 EMAs, this helps me stay out of trades in pairs that are consolidating. Okay. This is the thing that's a little bit hard to spot, even for me. An indicator goes off, you look at it, everything looks good. But sometimes, you want to take trades on pairs that are trending strongly, and then you wait for the pullback, right? That's basically what all of our strategies are. We're trying to trade with the trend, whether it's just on the time frame we're trading or we're using a higher time frame as well. But we want to trade with the trend, and then we're looking for pullbacks, right? And so, but you still need to stay out of those pairs that are consolidating. The guys, the lead guys in the community, they have no trouble spotting that. As soon as they look at a chart, they could see that. For me, it's a little bit different because for me, you could kind of adjust the chart size, which I'll show you in a second, but that's why I added the higher time frame um, criteria on here, and I'll show you what I mean here in a second when I go to the charts. Okay, so here on the charts here, and by the way, we did take this trade here in EURCAD. And again, this I'm not giving signals. You can't take this trade now anyway because it's too late. But you could see here that we are kind of in profit here, which is good. But again, all trades are a coin flip. We're going for a 1 to 1.75 risk to reward on this. The guys in the community go for a 1 to 2. I make it 1 to 1.75. For whatever reason, a lot of my trades, I noticed that they almost get to 2 and then they turn around. So I've just adjusted that to 1 to 1.75. I don't know what happened here, but my screen kind of went blank, so we'll come back to that anyway. So again, here's your 3-in-1 indicator right here. You can find on under indicators here, right? You just type that in. And again, we have this set 55, 233, 987. Those are the three moving averages we use. This is just one I have on here. These two you don't have to worry about. LuxAlgo Trendline with breaks. The only thing you have to do here, leave the settings the same, default, but when you go to style, just get rid of this and this because it just gives you too many lines if you leave it on there. All you need is the upper and lower. But again, just use the default settings, just uncheck upper break and lower break. And then, of course, our ATTH Flow indicator, that's our community indicator. Let's see here. We have a multi-time frame checked. We have 5-minute, 15-minute, and then the 55 filter. Now, if you're going to trade on the 5-minute, then you would select the 15-minute and the 1 hour. You don't want to select the 30. So if you're trading on the 5-minute, you would select the 15 and the 1 hour. I'm trading on the 1 minute, so I have the 5-minute and the 15 selected. Again, 55 filter as well. That's it. So again, going back to this page here, if you want to trade on the 5-minute, then your higher time frame would be the 4 hour, not the 1 hour. And these would be set to multi-time frame 15, 1 hour, 55 filter. Okay, that's all you would change if you want to trade on the 5-minute. So so you can see we have our trend lines on here. So basically what we look for is we have our alerts set here. I want to show you the higher time frame. If we go to 1 hour, again, I go through all the pairs at the beginning of the session, and I want to make sure that the moving averages line up on the 1 hour. So they have to line up on the 1 minute. Whatever time frame you're using to take the trade, before you take a trade, you have to make sure that these moving averages line up like this. The blue is the 55, the red's the 233, and the black's the 987. For a sell, you need the 55 below the 233 and both of them below the 987. Okay, so you want that to line up on your higher time frame as well, because this keeps you out of trading pairs that may be consolidated. That's why I've added this. Like I said, the leaders in the community, they don't need it because as soon as they look at a chart, they can determine in their head it's not consolidating. I'm not so good at that. So I like to see this. I know that if these moving averages are aligned like this for a sell, that there's a good chance that's not consolidating. You could still come upon a situation where you go to take a trade and it is, but this at least keeps me out of the pairs that are going to be have a chance of consolidating. So you see here in AUD, the blue is below the red, but they're both above the black. So these aren't aligned. So that's why I don't have any flag on this pair. You could see AJ, right? We could see the blues above the red. They're both above the black. So that's aligned bullish. So I have a blue flag there. AN, you could see here if we squeeze this hard, the black's all the way down here. So that's in a strong uptrend. That's bullish, right? EUR, NZD. See, the black's going to be up here. So it's black, red, blue. That's aligned bearish. So these moving averages have to be aligned on your higher time frame. For me, it's the 1 hour because I'm trading on the 1 minute. If they're not aligned, I don't put a flag here. And if an alert comes out, I will not trade that pair. Okay. So I only actually need to set alerts on the pairs that I'm going to trade today. Now I have alerts set for all of them because I'm just testing this out to make sure. But when you set your alert here, you just click on alert, right? Where it says price condition, you want to select your ATTH flow, right? You want it to be, let's see here. Oh, you have to select it first, Bill. So you select ATTH flow. You want the arrow up or down, right? And then as I like it to trigger once per bar close. Okay, once per bar close. That way I don't get the alert until the bar closes, and that way I know the alert's valid. If you have the alert going off while the candle is still forming, it's going to come on, it's going to go off, and you're not going to know. I wait for it to close because we still have to wait for a trend line break. We still have other criteria that we have to look at before we would want to take a trade. So since we don't normally, 9 times out of 10, we don't need to take that trade as soon as that ATH candle closes. We still have some time because we need also a trend line break, and we also need a confirmation candle. So those are the other two things that we need. Okay. So you can see here, just to kind of give you an idea, let's go back to the 1 minute. This is what we trade on here. So we got right here, we got that bullish alert. That's that red triangle go off, right, on EURCAD, I'm sorry, we got a bearish alert, the red triangle, go off on EURCAD, which is bearish on the higher time frame. So this is a pair that we were able to look to trade. Now, in this case here, price had already closed below the trend line. You see this big long trend line that the LuxAlgo indicator paints for you. So price had already closed below. And what our ATH candle did, this is a little bit different. It went up and it retested that trend line and bounced off it. So this was a different type of trade. This isn't a normal type of trade that you would take. Normally, you wait for the ATH to go off. You wait for a trend line break. Sometimes it's the same candle, and then you wait for a confirmation candle. Now, in my case here, these are not confirmation candles, right? This up candle obviously isn't. This candle right here was my confirmation candle. So that's where I wanted to take that trade when that candle closed. I needed that to close strong. I needed it to be an impulsive candle to the downside. And so that's what I was waiting for right there. Now, normally you like this candle to occur right away after the trend line break. In this case, it didn't, but we did take this trade. Okay. And currently we did make a pretty good move down here in this. Just see something. Right. And again, we have this set to 1 to 1.75, and there's no managing the trade, guys. You set it and you forget it. You just let it go. Okay. You let it go. Now, that's very important. You don't want to manage these trades. Now, there are a couple situations where you do have to do something, like at the end of the day or if the weekend's coming up. Okay. What happens is around at the end of the day, around that 5 p.m. Eastern time, the spreads are going to go crazy. They're going to open up. And so if you're going to hold your trade over the end of day, you do have to think about either just getting out, or you have to remove your stop loss, because what's going to happen is the spreads are going to open up. Price isn't going to move as far as the spreads do. And you're going to have a situation where you get stopped out of the trade, even though price never even came back to your actual stop loss because of the spreads opening up. So I have my alarm set off. I have an alarm on my phone set for 4:30 so that I know if I have any trades, I got to go remove the stop loss. Then I have another alarm set at 6:15 p.m. Eastern, so I know if I remove the stop loss, I got to go put it back on. Okay. Now, this is a little bit risky because you could lose a little bit more than you want to lose on the trade. So you have to make that decision. Do I just get out of the trade every day around 4 p.m. Eastern time, right? Or if I'm going to hold it, I have to remove the stop loss, because you're going to get stopped out if you don't. Okay. And then, of course, on the weekend, you're going to want to set a rule where on Friday you get out of every trade, no matter what, at 4 p.m. or 4:30 p.m. Eastern time, whatever time you want to make it. And then you have to stick to that rule. So that's kind of what we're looking at there. So we're going to say here, that we need the ATH, obviously, or what's the word I'm looking for? A criteria for the trade are the ATH, in direction of 1 minute and higher time frame trend, right? Using 3 EMA rule, right? Once we have that, we need a break of the trend line. And that could be the same candle. Sometimes the ATH comes off on the candle that breaks the trend line. Sometimes it doesn't. But you want it to be fast. You don't want the ATH to come off and then 10 candles later the trend line gets broken. That's probably not a good trade. You want that trend line to get broken within 1 to 3 candles after the ATH goes off. Okay? Break of trend line, and then you need a confirmation candle. This is where a little bit of subjectivity comes in. We try to make the plan as objective as possible, but this is where subjectivity comes in. The confirmation candle just has to be a strong, impulsive candle in the direction that we want to go. And that's why in this case here, you could see that I use this as my confirmation candle. It's a strong, bearish, impulsive candle down. It's also what's called an engulfing candle, which is important to see how this blue candle, this bullish candle the body of it gets totally engulfed by the bearish candle. So that's why this makes this a very good confirmation candle, because not only was it a strong impulsive move with very little wick to the downside, right? It was also an engulfing candle, right? So that's good. So that's a good confirmation candle. Now, again, you're going to have to learn that, and that's why you have to take at least 100 demo trades, because you're going to make some mistakes with that confirmation candle. Okay, guys, so I wanted to just go over this plan real quickly here, and then what I'm going to do is I'll add to this video later on today. After this trade finishes up, maybe there's some other trades I can get in. I look to try to get in, about a maximum of 3 trades a day. Okay, and I just risk 0.5% of my trading account on any trade. So if you're going to risk 1% of your trading account per trade, then you're only going to want to get in a maximum of 2 trades. So since I'm risking 0.5%, I can do 3. I can even sometimes stretch it to 4, because that's going to give me a max of 2% if I would lose every trade, right? So that's kind of what I do. Now we're also testing this out on the Asian session as well. So I like to wait till 9 p.m. Eastern time before I would take any trades. That way all the craziness of the Asian session kind of gets washed away. And so 9 p.m. till about 11 p.m. Eastern time, I would look to take trades. So that's kind of what I'm doing with it. So I'm going to finish this up for now. Let's just do a brief review. This is ATH Flow with the trend line. We're on the 1 minute time frame. You could do the 5. Our indicators are the ATH Flow with the multi-time frame box, the 5 minute to 15 minute and 55 filter. We have the trend line with breaks, LuxAlgo, that paints our trend lines for us. We have the 3 EMA and 1 indicator with the 55, 233, 987. Our higher time frame is the 1 hour, and the EMAs have to be aligned first before we can trade that pair, right? Criteria is ATH in direction of the 1 minute and higher time frame trend using the 3 EMA rule, break of the trend line, and confirmation candle. So at that close of the confirmation candle is when you look to take the trade. So I'll finish this up later on, guys. Have a great day. Hey guys, so I'm going to come back on here. It's about 2:49 p.m. now. So I made a video for you guys earlier today showing you the strategy. And by the way, just so you know, when you're looking at me, earlier today, I made the video. This morning, I went to the gym, I went and got my hair cut. And so I should look a little bit different to you at this point here with less hair. So it's the same day, I just went and got a haircut. Now, And I'm going to show you these trades in my broker account as well, so that you know I did take them and I'm not just blowing smoke up your ass here. But anyway, this was a trade after I got off with you that I took in CADJPY. So I entered this trade on this 1138 candle. Again, we're on the 1 minute time frame, right? This is our ATH flow with the trend line. Indicators are the ATH flow with the multi-time frame check, the 5 minute, the 15 minute, the 55 filter. We have the trend line with breaks, LuxAlgo, and we have the 3 EMA 1 indicator, 55, 233, 987. And then we want to make sure we're aligned with the higher time frame trend as well, using those moving averages. That's the 1 hour, because, well, excuse me, like I said, that helps me to stay out of pairs that tend to be consolidating. Okay. And the criteria is the ATH in direction of 1 minute and higher time frame trend using the 3 EMA rule, right? Those moving averages have to line up. I'll show you that again here. Break of a trend line and a confirmation candle. So right here is where I took this trade up. Now you see here we have two ATH go off here, and they're both bullish. If we look over here to the right, earlier today when we looked at the 1 hour time frame, the moving averages all lined up, right? They were all in line just like this. Blue, which is the 55, above the red, which is the 233, and they're both above the 987, which is black. So they lined up. They're in sync with the 1 hour as well. So this is a pair that we could trade if we get a bullish ATH, which we got. So now we got an indicator right here, and then price pulled back off of it. Then what happens is price, we get this candle right here, which is a nice candle that closes above the trend line. It also has an indicator, an ATH on it as well, but we already got one back here. So this candle now qualifies for a trend line break, and it's also a confirmation candle because it's a nice impulsive candle that closes above this area right here. So that's why I got into that trade at some point on the next candle. That was CADJPY, and you can see how this shot up. And so that was actually the time to get in this trade, right? The time that we're going to mark this candle here, because when that candle there closes, that's when you would want to look to buy. Right? And that's what I did. So the buy was there, and you could see the move up that this made. Look, I mean, just an enormous move up. Okay. And I'll show you what that looks like in the brokerage account. Now, EURCAD, this was a trade that I was in when I had you guys on that first video here. So I got in this trade earlier on this 10:21 a.m. candle. And so again, we got the ATH. It was a bearish ATH. We look over here, our 1 hour higher time frame was also bearish, which means all of these moving averages lined up the same way on the 1 hour. Blue, red, and black, right? From the bottom up for a sell. So now on this one, I told you the price had already broken that trend line, and then it retested it on this ATH candle. Then we got several candles there, which really weren't confirmations, right? We got to move up, and then we got a nice confirmation candle right here. And what we said was that it was also an engulfing candle. So that's why it was a very good sign for us. And then we ended up getting in sometime on this 1021 candle, 1021 to 1022 candle, because we're on the 1 minute time frame. So the actual place, though, to get in would be obviously at the close of that candle right there. That is where you would want to sell. Okay, and then you could see this makes a nice move down before it retraces, right? And then it moves down again, right? And then it moves down even further. Okay, so we're going to look at this, like I said, on the broker account to see what we ended up doing with that one. Okay, and then the last one is USD CAD. Okay, so with USD CAD here, see where we're at here. So right here, you can see my arrow here. I got in on this 1105 candle. So again, right here, we got a red, right? We got a red red ATH flow indicator, bearish, right? When we look at UCAD here, the flag is red here in our watch list. That tells us what? That tells us that the 1 hour time frame was bearish, right? The moving averages were lined up the same way from the bottom up, blue, red, black. Okay. So again, we go to that 1 hour. Now the pairs where we don't have any flag color, those are pairs we just don't trade. If an alert comes out, we don't look to trade. Okay, so this candle right here, what you get is you get a ATH candle that also breaks the trend line, right? It closes below the trend line. And so now all you really need is a confirmation candle. But what happens is price kind of retraces. Okay. And then right here, you get another candle that crosses the trend line. It's a nice impulsive candle, but I don't count it as a confirmation candle because it hasn't moved down below this prior low here. So when this candle here closes down here, that gives me the confirmation to take the trade. And I do get in on the next candle at some point. Okay. So let's just, and again, this confirmation candle is a little bit subjective, right? But you would want to sell right there. So that's where you would want to take that sell. Okay. And then price moves down and continues moving down, right? So very good trades today. Now, let me show you what they look like in my broker account. And again, I'm not an investment advisor. I'm not giving you signals here. I'm just showing you after the fact what happened in the broker account so that you know I did take these trades. I'm not just waiting till after the fact to mark everything up. You know, I did come on earlier to show you what it looks like. I did show you I was in the one trade, but I just want to be transparent here. So look at our broker account today. We're going to see 3 closed positions. Okay, you see here USD CAD. You can see that was a win. CAD JPY, that was a win. And EUR CAD, that was a win, but it was a little bit less of a win. Okay, so let's look at USD CAD here first. And again, it takes a little while to load up when you have the when you're making the video at the same time here. But you could see here, like I told you, I go for a 1 to 1.75. And you can see here that with this, this kind of kept moving down even a little further, right? So that was a good trade there. You also see my triangles here. That shows where I got in the trade. That hollow red triangle shows where you sell. And the green triangle on my broker here, Trade Locker, shows where you bought back the cover. So that's how that was a winning trade. So if we go to USD, that was USD CAD. Let's go to CAD Yen, CAD JPY. So this was the buy. Again, you could see where I got in the trade. This was set up for 1.75, and you can see that this just keeps going, right? So we can get even more. This ends up being like almost a 1 to 4, and it's still kind of going there. But again, we're happy with our 1.75 to 2, whatever you want to do. I do 1.75. If you want to do 2, you could do 2. Okay, so that was that trade, and then the last one was the one that I know I told you guys not to do this, but I decided to get out of this trade early. And usually I don't do that. And I told you guys not to do that. You're supposed to hold them. But every once in a while, I see some type of price action that tells me that there is no reason to stay in this trade. Okay. So what happened was you could see where I got in the trade, right? And this thing moves slowly when you're making a video. So you can see where I got in. Price made a pretty good move down. Didn't quite get to the target though, right? It didn't quite get to my target. And then what happened? It started reversing. And we just got these bullish candles right in a row here. And I just happened to look at it, and I don't usually do it, but I did get out of that trade. And you could see here that this trade would have ended up losing. So I did end up getting a little bit less than a 1% gain on this trade. You could see here what it ended up being. It's a little bit less than 1%, but that saved me from losing 1%. So when you put that together, you have basically the same amount of money that I would get from a winning trade, right? The 1.75%. Because instead of losing 1%, I was able to get almost a 0.5%. So it's not quite the same, but you get the idea of what I'm saying. Instead of having a loss, I had a small gain. So hopefully that shows you. So that's the strategy, guys. That's what it looks like on the charts. And again, this is what the trading plan looks like here. And I just want to show you before I get off here, I want to show you something that I posted on my timeline today, and I just want to kind of read it to you. Of course, here's the 2 trades that I took today. I have them on there as well. But I made another Forex post. Here, let's see if we can find it because I do post. So and you can see the Trading in the Zone book by Mark Douglas. This is a very good book. I recommend you read it. It's a long book, but you can get it on Audible. You can get an audiobook version of it. If you're on Amazon, you can get Audible, and you can get this book here, and you can listen to it while you're at the gym or driving in the car. But basically, one of the biggest, what this says is this here. One of the biggest mind shifts in trading is realizing that even when all your conditions line up, the outcome of that single trade is still basically a coin flip, right? That doesn't mean that your edge isn't real. It just means that your edge plays out over a series of trades, not in any one moment, right? And this is something that Mark Douglas drives home. He talks a lot about this in Trading with the Zone, says how you could follow your rules perfectly, you could wait for your setup, and then still watch the trade go in the other direction. That's not failure. That's trading, right? Your job, right? Your job isn't to control the outcome of the trade. Your job is to consistently execute your edge. That's what you need to do. You have to think about a casino, right? The casino, they don't stress out over the next hand. They just keep dealing the cards because they know the edge shows up over time. Same thing here. Wait for your conditions, take your setup, let the probabilities do their thing, right? Let the probabilities do their thing. Detach from the outcome and focus on execution. That's where the real growth starts. So I'm going to leave you guys with that. Have a great day. And again, if you want to get if you want to watch Michael's video, drop a comment below and I will send you the link to the video where he explains this new strategy.